Okay, what are we looking at here, Jonathan?
Okay, so we're actually going to start talking about currencies now. So if we were to go back in our 20 minutes ago, and we're talking about the dollars printed into infinity,
Mm-hmm.
so we're going to go into this paradigm here. So right now we're looking at the United States dollar versus the New Zealand dollar, and right now we are here, which is 61 cents to the US dollar, and this chart goes back to 2003. Okay, so you can see here that we are coming to some sort of precipice where there is something happening with the United States dollar right now. Okay, let's look at current. Let's just reverse a little bit.
So this jagged chart is our New Zealand currency, and it's
Our New
how it's
Zealand dollar
tracked.
since 2003. Okay,
Wow. And why do we
so
always measure it against the US dollar? Why is the US
so
dollar so
yeah,
powerful?
so let's go back to the why the US dollar is king at the moment. So in we can go back to the price of gold. Actually, we can start there. I think I can go back to.
You've done a huge amount of work on these charts. This is great having them all here.
So we can go back to, here it is, 1924. Okay, and then we go back to about 1932. So the Great Depression was around here. Okay,
Yeah.
and then what happened was the government said to the Americans, hey, you give us your gold and we'll give you these paper notes saying the gold is worth $20 an ounce. Okay, and they locked it in for $20, and basically, and we're making gold illegal to own. They banned gold. Okay, because gold was money. Gold and silver, gold was money. Gold and silver is money, but the government was locking down the gold. Okay,
because we
so
had the gold standard, so money that was printed had to be linked to the amount of gold the government owned.
We had the gold standard. So right about here, they locked it in, and it was about $20 an ounce. It says 26 here on the right, but it was about $20, and they gave you a US dollar with the word $20 on it, and you read on it, it says this is bearable for 20 ounces, 1 ounce of gold. Okay, and
Jonathan, can I stop you there? I know I'm digressing sometimes, but I just had a metaphor. Isn't it a bit like I've got a really healthy immune system if I eat well and I sleep well and I exercise and I look after my body? But then you come along with a jab and you say, you give me your immune system,
yeah,
and I'll take it.
Oh, yeah.
Why wouldn't those people back then go, but I've already got the gold. I don't need your stupid piece of paper.
Well, the government outlawed it. The government comes on and says, you're not allowed to own gold. We need it for our restoration efforts after the Great Depression. I'm not too sure why, but they says, no gold for you, but you're allowed jewelry, you're allowed your earrings and stuff. So a lot of people converted it into jewelry, and earrings.
But wait a minute, that is such a parallel with the jab. You're not allowed to choose your own immune system. We will designate what your immune system will look like with this jab. I'm sorry that it's a little bit of a labored metaphor, but man, there are parallels out there. Let's go back. Yeah.
And then once they gathered all the gold, they go, aha, well, we're going to reprice gold and double the price. They took it up to $35 an ounce. And then a good 50 years goes along. We seem to get about maybe 50 years per monetary system, per system of how things transact. It goes along, then the war pops along and whatever happens. Then around the late 60s, early 70s, America was saying they were saying to all the countries, you give us your gold, okay, and we give you dollars. We give you $20 in a redeemable note. Okay, so this is how America was suddenly becoming so big. All the countries were giving them the gold, they were buying goods and services, and America would just give them these IOU notes, okay, backed by gold.
IOU notes being the American dollar.
Yep, correct.
Wow.
All it is one giant IOU. IOU this, IOU that. It's not really anything else. And then this French president, Charles de Gaulle, he was thinking, wait a minute, the US is printing an awful amount of money right now. I suspect that they're printing way much more money than they actually have in their coffers with gold. So he started going to he said to the US Mint or the US government, I want my gold back, please. And so they started, and all the countries started catching on. They knew that America was starting to run a Ponzi scheme where they were printing way too much where it wasn't backed by any gold. There wasn't enough gold in the banks.
Wow.
So what they did was, obviously there's instability going on here, and the government freaked. They go, you know, I think Richard Nixon was in power at the time. And then so the next level was Henry Kissinger comes along and he goes, okay, this is how we retain power. So he goes over to Saudi Arabia and he says to the Saudis, okay, how's about this? You can only sell your oil in exchange. If you sell all your oil for the US dollar, we will back you up with all our guns, all our might. So if you're under any trouble from any country or anything that's going on, you come to the American government and we'll come in with our guns. We'll give the protection. Okay. But you have to sell everything in US dollars. So this was the birth of the petrodollar. Okay. So now, so every time they would print, you know, they'll make oil, money will be printed, but they just print money anyway. But basically, so that locked, and everybody needs energy. Everybody needs oil. Oil is the lifeblood of what's going on the planet, right? In terms of the energy system. Okay. So that created the petrodollar. Okay. And then, so what's that, 1970. So we're about 50 years, and remember, it's about 50-year lifespan between every form of currency system. And then gold, you know, started sort of to take off. Okay. So here it takes off. Okay. And then
because people what they were demanding gold because they felt the petro.
Yeah, they just the lack
was
of faith in currency, the lack
yeah.
of faith. When people have lack of faith in currency, they run for something that's always been money for thousands of years, gold and silver.
So they knew that Kissinger had pulled a fast one. People know, don't we? We know when we are being duped, actually, if we stop. Yeah.
So what happened, and there was a giant inflation crisis, and there was a giant crisis in the late 70s.
Yeah.
That and giant inflation, massive inflation, which we're getting now, is mirroring the 70s. Okay. And this
was that when we had Carlos days, Jonathan, and
apparently so,
the petrol crisis. Yeah.
I was just like a wee sprocket then. And then what happened was gold and silver just shot right up in price. So gold shot up to, you know, $683 an ounce. Okay. Mm-hmm. And then what happened was the Federal Reserve, which is another story in itself. Federal Reserve is all about central banking. They shot up interest rates in the banks. Okay. This because people were losing faith in the money and everybody was running to gold. They shot up the interest rates to about 20%, you know, like, yeah, you know, and then what that did, that acted as brakes on the runaway hyperinflation, because suddenly goods were too expensive to buy. And then so the prices started to come down, and that sort of brought the sort of the gold price back. You know, Ian was talking about things go up and down, but, you know, gold kind of still hovers in place. And then we went through
that looked like a very turbulent period there.
Yeah, it was very turbulent.
Yeah, and those high interest rates.
Yeah, but
that really stops people wanting to borrow. So money becomes.
We are repeating this again, but we have low interest rates, and it's all happening again. And as soon as they start to increase interest rates, the whole economy, the whole housing market will implode. Okay,
so it contracts and then it implodes.
They're doing what's called a controlled demolition right now of the world economy. It's all by design. And then we went into like a 40-year bull market in what was called the US bond market, treasury bonds, where everybody was parking, all these governments were parking their money in the US treasury bonds. So China would buy, you know, we get stuff from China, and China would buy US treasury bonds, which is basically giant blocks of IOU debt that they will get a yield on of a couple of % a year. Now that seems to be all over now. That was all coming to an end. Okay. China's not.
And just explain that term, bull market versus bear market. Bull market is the image, isn't it? Charging ahead.
So this is a bull market here. So as it's starting there, 76, and then everybody just jumps on, then everybody gets the FOMO and everybody goes up, and then it has what's called a blow off, where it just in the last 90% is done in the last 10%, you know, of the time. It just blows off like a volcano, and there's a big capitulation, and then it bounces back, and then it goes into a bear market here.
A bear market is contracting.
Contracting, correct. It's just,
and I liked your very economic term of FOMO. It's not economic, it's a fear of missing out.
So we got started on this on gold. This is gold sort of reacting. So let's go back to this the fiat debt market. So we're going to
well explained. In any comments you've got, he's explaining it very clearly, isn't he?
Yeah, it's exactly, as we talked about the relativity of the gold and the silver in the market.
Yep. It's great.
So we're going to go back to the US dollar. So we're now living on this if we all imagine that we're a team of skydivers and we've jumped out of the plane, okay, and we're all going down and we're all attached to each other, maybe like a skydiver link, how they're all holding hands, okay. Well, that is the fiat currency system. So one skydiver is the US dollar, one skydiver is the Canadian dollar, New Zealand dollar, one's the Zimbabwe dollar, but we're all sort of going down a bit like this as we're going down, where, you know, we're all sort of attached to the US dollar because of the world reserve currency, because of Henry Kissinger, and we're all falling down and we're all attached, and we're going up and we're going down, but we forgot to put our parachutes on. Okay.
Oh, ouch.
We forgot to put our parachutes on. But right now, you know, so the US dollar is the one that's kind of the slowest about to splat on the ground. Okay, so, and another way to describe fiat currencies is it's the most prettiest leper in a room full of lepers, or the prettiest.
Wow. It's a really sick currency. It's a really sick currency.
The fiat currency system is sick, but the US one, even though they're printing it to oblivion, is the least sick. Okay.
Is the least sick? Or no, I thought they were the most sick. You said they're about to go
sick, but the US currency, because they have the market dominance, they're the least sick. So what
are we seeing here, Jonathan?
This is called the Dixie or the so let me go to this one. This is called the Dixie or the DXY. Now the Dixie is the strength of the United States dollar. Okay. And so if we were to go back into 1978, it's going, okay. So here is where gold had its bull run as the US dollar started to go, okay.
Yeah.
And then
another technical term.
Yeah. Okay. And then they put on this 20% interest rates, which completely put the brakes on the economy, and it put the brakes on the inflation, but it was the high interest. And what that did, that brought up the strength of the dollar. Okay. And as a result, the gold pulled back. So everything was kind of rebounding yin and yang. Okay.
So now everybody's saying, hey, I want American dollars for my business. I want American dollars.
American dollars strong. Okay. Trade.
It's all supply and demand, isn't it?
Yeah. And it's all energy. You have to look at it as energy just flowing around. Who's got the biggest currency is all movement of energy. So if you're taking energy over here, it's taking energy away from over here.
Yeah.
So then the US dollar this is like 40 years goes up, and then it goes down. Okay. This is, I guess 87 is the crash of all the yuppies had their cars, you know what I mean? And, the yuppie days.
That was a big one.
Yep. And then
the share market completely lost its value there. That's
lost its value here. Yeah. And then it goes along, and this is the tech boom of 2001. Wow. And then that popped, and then it all went down again. Okay. All went down. And then this looks like the housing market boom was around here. And then it all popped again. And this was the global financial crisis. Okay. And then the government, USA, did massive money printing. This is where they did the biggest stimulus for the banks and gave all the banks hundreds of trillions of dollars, or hundreds of billions. Then it all popped up again. They papered over the problem. Okay.
This is what I was talking about before. Barry Obama comes in and he just prints money and he saves all these rotten banks.
This is the Brahma print.
Yeah. And this is post the GFC.
Yeah. And then we just spent, hobble. We've been going along sort of living off a lot of money printing. And then this is COVID, right? April 20, March, it just crashed again. That's the COVID. And then of last year, they started giving out all the stimulus checks in the USA, giving out free money. Yeah. Okay.
And here.
So, and here. And so then the US dollar just started spiking again. And what's happened is it's kind of like broken out of this channel here. This is called technical analysis. So I like playing with charts. It's a bit like, being a navigator on the oceans, you can just draw charts and lines and sort of get an idea of where things are. And this Dixie value, okay, is looks like it's on path to go up to 119 again, okay, because it's broken out of this area here. It's about to go up to here. So if you've got a stronger American dollar, it's sucking the energy away from the other currencies, which means the other currencies are going to pull down in value, okay? Why this is happening, I can't give you an exact reason why. It's all lots of, economics, supply and demand stuff, but just looking at charts, a stronger American dollar equals a lower, currency. So here we're having the New Zealand currency going down. So it's looking like this is called a support line right here at about 60, if we look at historical patterns, but this just might blow through. And then the next stop could be around, 56 cents for the, for the US dollar. Okay. But then, so this is all, let me go to the Australian. I'll quickly go through these. Australian is about to sort of, that's New Zealand, Australia. Here's the pound versus the US dollar. The pound is now, it's on its way down. Okay. We're about to go look at the euro. This is called a channel.
Whoa, there's a consistency, isn't there? As the
exactly.
US dollar sucks it all up.
Think of the skydivers are going down, but the US skydiver is the slowest one. He's back up maybe a couple of 100 meters above the other skydivers. And right now, Britain's a bit lower. Remember, the ground's below us, and none of these countries have got backpacks of parachutes on. Wow. The parachute traditionally was gold, or was tying to gold or something like that.
Yeah.
Canadian.
So
that's kind of
all these
along.
Governments around the world, Jonathan, have been so fiscally irresponsible. They have not been responsible. No. They don't like gold because they can't print gold. And they've put their countries into massive debt through all this printing.
Yeah.
This is a mess.
So here's the Chinese currency. It looks like, that's reacting to the strong American dollar. Okay, and that could be, going down low. This is a good one, the Russian ruble. So if we have to go back, look at Russia. So what's this, 1990, sort of the end of communism. Okay.
Yeah.
And then I think when Russia flows, they put their money on the open market, and it just plummeted. It's all on the open market, and it's sort of been going down. But something happened over here. And right here was the invasion of Ukraine, right there. And of course, America was like, bad guy Russia, let's crash their currency. Let's do what we can to make them pretty weak. Okay. And their currency crash. But Russia goes, well, we're a very resource rich country. We've got food, we've got gas, we've got oil, we've got lots of gold. And so what Russia have been doing, they've been saying they've been pegging their ruble to the gold, not backing it, but pegging it, just saying we'll offer this much rubles per ounce of gold. And so what happens is Russia, because it's a very resource rich country, that's the backing of and they're putting those resources to use. That's backing their currency. That's giving their currency strength. So now ruble is actually, it's actually on fire. It's actually going up.
Wow.
So, and that's
Jonathan, we had gold in New Zealand. It was probably all, dragged out of those rivers in the South Island in the last century and sent over to American coffers. Imagine
probably so we can get those pieces of paper back,
Oh God, those IOUs. Well, that's interesting about Russia. And what's this one?
This is the Australian one. So let's go. This is a monthly chart. So this is looking. Here's the time down here. So this is the Australian to the US. So you can see that's on a downward trajectory. This is the South African one. Now, South Africa is a very resource-rich country, but it's been kind of mismanaged. That's the South African rand.
Because they're pegged to the US.
We're all pegged to the US. We're all, more ugly pigs in a room full of pigs.
What does it take to unpeg? What does it take to?
Well, if you try and unpeg what happens, the US government comes in and kills your prime minister and president and turns your country into rubble.
Or
and
creates a war. What countries are you thinking there?
Well, Libya is a good example. President Gaddafi says, okay, well, we're out of this kind of US currency. We're going to create a gold-backed dinar, a gold-backed currency, and pretty quick, Hillary Clinton we came, we saw, we killed him.
Oh my God.
Because he would have been selling oil in this new currency, and it was competition for Henry Kissinger's created system. So they don't want. So they just make up they just make up some reason about terrorists, and then they just come in and wipe them out.
And MSN, everybody in MSN, you fall for all of this, and you regurgitate it. Every one of you, without doing this sort of research, without questioning, without digging deep, and you regurgitate it, and then the people believe the official story.
Going down the hydro slide.
Wow.
We have again, the Turkish currency, down the hydro slide, and now it's just starting to plummet. This is what you'll call a trend line. I just drew this in just to give you an indication of the general slope. Sri Lanka. So what happened in Sri Lanka? Why are they all going crazy? Let's go to the weekly chart. So I guess something happened on the 28th. If you were to go look at the news cycle around the 28th of February, something happened in Sri Lanka. Bump, their money just, I think, what looked like it halved overnight, and it's just now hobbling along. Their currency is just destroyed. It's decimated.
What do you think happened around the end of February?
I have to go online and read the MSM news.
Yeah.
So I wasn't keeping in track. I was just seeing the after effects.
Wow.
So again, Korean, same thing. It's on its way down. This is the Argentinian peso, Now Argentina's been through this before. They've crashed before pretty big. And so they're no strangers to what's going on. So if you want to see what happens when a currency crashes, go look at the history of the Weimar Republic, go look up Argentina during the currency crisis, look up Cyprus, look up Greece during currency crisis, put those words into the search engine, and then you'll see what happens. There's the Mexican one, okay, and here's the Indian ruble, okay.
Goodness me! So
what
happened there? That's a plummet.
So these countries. So now, but then you're thinking, oh my god, I'm in a currency that's like, it's going to splat against the ground, and this is where can I hide it? And so there's been a lot of narratives over the last couple of years. People are getting their money out of the bank, they're putting it into gold and silver, and they're putting it to crypto. And crypto is another conversation for another time. So, so let's look at some charts of gold in these crashing economies. So we're going to go to, here's the gold in New Zealand, okay? And you see it's, it's volatile over the years, and you see it has a upwards trend, okay? So as a currency crashes, gold is the counter trend. Okay, you see it.
So say the GFC, what was gold doing back in the GFC?
The GFC.
Got that there?
Well, this is where it started. Okay, so this chart only goes back to 2007. So it all crashed, and then gold was here, so very, very cheap, and then it started to have a bull run.
Wow.
And then it went up to, it had sort of highs around 2011. And then it sort of went into what you'll call a secular bear market. It's a bear market, but it was not a deep gouge one for decades, but one that lasted, less than a decade.
And that just means people were going back to putting it into American dollars again.
Yeah.
More or less, yeah.
And so now this is what you'll call a cup and handle. So there's a cup and there's a handle. So something's about to happen here. It could go up, it could go down. We may get another pullback. It could even go down to this trend line here, to 2,400. It could, but basically the trend is looking up. And whenever a currency kind of goes to pus, think of gold as like sort of a Noah's Ark that sits on top of all that pus,
Yeah. Not an attractive image, but an accurate one, you'd say, Ian, wouldn't you?
Yeah. So here we have the crashing Turkish currency. It's going, but now this is priced in gold. So if you're in Turkey, then you go and put your Turkish lira into gold. Look at the value of your gold. It's going up in Turkish lira.
Wow.
So you're putting your savings aside as your currency is crashing, and your savings is just, it's holding value. You know, there's a saying that traditionally over the centuries, you could buy a suit with one gold coin, and it should be consistent throughout the centuries. You know, a very, very high class suit. What's another thing you could buy with one gold coin that's kind of stayed stable over the centuries? Ian, do you know?
Yeah, I mean land. I mean
Land, yeah.
yeah.
We're gonna go into land actually soon.
So that metaphor of the suit is just saying over the centuries it's the same, meaning gold is very stable when other things are not.
It'll always buy you a well-tailored suit.
Okay.
Here is the price of gold in euros. Here is the price of what's this one? Oh, I did that chart wrong, excuse me. Here is the price of gold in Japanese yen. You can see the upward trend. Here's the price of gold in the Indian rupee.
Wow.
Okay. Here we're about to look at the price of gold in the Sri Lankan money. Okay, so their currency is debased, but if you're a Sri Lankan and your money was about to go, and you go, well, I'm going to go buy gold. Look at that.
Oh boy, it's an obvious link, isn't it?
So if you've got like, if you can buy gold in smaller than an ounce, you can buy, 1/10 of an ounce or 1 gram, then you can take that 1 gram out to N, and he'll substitute it for some fake money of that era. Then you can go out, you can buy some food with it, or you could take that 1 gram of gold and have it as an account with your local farmer's market, or an ounce of silver.
Nice.
So, and here is gold versus this is the Argentinian. So they obviously had something happen right here. Their currency collapsed right here, and look at the price of gold. It just sailed above the collapse.
So Jonathan, that's such a beautiful idea about the farmer's market. You could take it and say, look, this gold is worth so much. So over the coming weeks, I'll be coming for food, and we'll just take it off my tab, as it were.
Exactly. Yep.
And the clever old farmer's market is going, this is fantastic for me. I'm selling my food, and I'm starting to get my own gold stores up.
Yep. So
what a smart way.
A smaller denomination is the silver ounce, and they're about, sort of around the $40 mark right now in New Zealand, including all the premium.
Yeah.
So you could actually take silver coins, which is more easily interchangeable because it's of a lower value, and then you could go to your local farmer and say, okay, here's 10 silver coins, give me a tab, and he'll have a little ledger. So if things get pretty crazy with the banking system closing, people are going to need food, but they're going to want a form of money to exchange. And if you can't get money out of the bank due to Cyber Polygon, how are you going to buy things?
Yes.
Cash and this, So now let's look at the gold silver ratio. So, okay, here's the price of silver in New Zealand dollars. Okay, this is going back to 2007. So the price of silver got as high as $58 in 2011, and now it's around 30. This is a very, very short chart. It's a very short timeline. So so that's the price of silver now that's New Zealand dollars. So with the premiums, it's around about 40 N these days. It's 40.
Yeah, just over 40. Yep.
Yeah. Okay. Yep. So what's another thing to take note of is the gold silver ratio. So like cigarettes and beer, or like the earth and the moon, gold and silver have a love affair with each other.
Yes.
Or history. It's history that goes back. The Romans were using it as a form of money. There is a synergistic relationship between the two. Gold has been a form of pure money, and silver has been a form of pure money and a used commodity in things like solar panels and electronics and stuff like that. It's got sort of two purposes. So gold and silver, they have the moon going around the earth. The one part, the moon might be further away from the earth, and another part, it might be closer to the earth. That's the relationship between the two. So silver has the same relationship with gold. They just yin and yang like an elastic band with their value relative to each other. So if you look at the history of silver, we've got in 1970, you could get 15 silver coins would buy 1 ounce of gold. Okay. And then if we look up over here in 91, no, if we go up to, we're gonna look here. This has never happened before in the entire history of the gold and silver market. So in 2020, when COVID happened, we had what was called a giant deleveraging in the markets, where everything collapsed and oil went into the minus $40. It became free, basically. Everything just collapsed in the markets. It's called a deleveraging. And the price of silver collapsed so far that it took 118 silver coins to buy 1 ounce of gold. And within, a year or two, it went down to 64. And now it's going back to, we're at 91 silver coins buys 1 ounce of gold. And I suspect we've got another big deleveraging coming in front of us with the banking crisis, okay? Based on a lot of chatter going on out there.
So just explain deleveraging, explain all of that. So we have the lockdowns in COVID times. There was no commerce happening.
We know the commerce, but when you go invest something on the stock market, those people who you've given your money and are investing it somewhere else, and they're borrowing money from somebody else, and everybody's borrowing money from somebody else and repackaging up and lending it to someone and borrowing it to someone. It's just this giant like stilts of cards. And then what happens is one of those cards breaks and the whole thing just goes crumble, 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 and that's what happened here. And right now we're sitting on tens of trillions of debt that's all tied up in all these things called derivatives. Tens of trillions and trillions of dollars. And that is rumored or predicted to come crumbling down. And when that comes crumbling down, all that energy that was all stored up is going to want to find a home. Okay.
And just explain derivatives briefly, Jonathan.
So you've got an orange, and the derivative of an orange is orange juice. So I could go out and I can buy. So we're actually talking about the gold market. So what we're looking at the gold market here, and they are trading what's called paper gold. It's just made up fugazi. It's a derivative. So it's not real gold. It's derived from gold.
Yeah, and Ian mentioned paper gold before, and I actually meant to ask you about paper gold.
That is paper gold. It's not real gold.
It's only in theory, really. I'm playing with it on the computer.
Yeah, and what's happening is there's these banks in whatever countries, or they're trading literally billions or hundreds of millions of dollars of paper gold back and forth with each other every day. They manipulate the market by trading back and forth. Okay.
So Ian, just explain that. So I would never want paper gold. Why would the banks want it? It feels very flimsy. It feels made up.
Well, I think in a market where it's a bull market, so the share market's doing well, no one's worried about all the extra money being printed, everything's looking good. Paper gold and paper silver kind of makes sense, because it's like you don't have to move it around. No one's worrying about it. So it's been talked about by quite a few people, or the desire to separate paper gold and silver from physical, because physical's to a lot of people so much more valuable. Yes. It takes a bit to move it around, it takes a bit to store it, and it's tangible. It's in your hand. If you go to the farmer's market and you hand over a bit of silver or a bit of gold to the different people selling, obviously the goods and services, they've got it. There's no question about it.
Yes.
Paper silver and paper gold, like Jonathan's saying, how do we know is it's real or not? That's just the same as printing money, isn't it?
Mm-hmm.
Wow.
And so what these bankers do is they actually manipulate the price of gold. And there are people, if you go into YouTube, and I'll have a list of resources at the end, that track who's manipulating who and who the crooks are. Okay. So that's not in my expertise, but there are people that follow those people. So, so the gold, these markets, I think it's called the COMEX and something called the LBE, or the London Metals Exchange, and there's one in Chicago, and they do all the dirty work of manipulating all the gold. And in their safes, their giant safes, they're meant to have that gold sitting in their safes, the tens of billions and hundreds of billions of dollars of gold. Whether that's true, I can't tell you. But all I know is I'm pretty skeptical of bankers. So
I mean, we laugh, but I sort of laugh and cry. Bankers
yeah.
are
So when okay, if we're going to have a multi-trillion-dollar meltdown in the debt market, okay,
yes,
people are going to want to run to safety, and you know the ultimate safe one has always been gold. You know, there are other safe havens, the crypto thing too,
and
but
silver.
so yeah, and silver. So what's going to happen is if this multi-trillion-dollar market collapses, people are going to run to gold and silver. Okay. And so that will cause a supply shock. Okay. So there's only so much silver and there's only so much gold. So there, Mike Maloney, who we'll talk about soon, he refers it to gold and silver will become unaffordium and unobtainium. If you want to go try and buy it, N's going to be out of stock. Okay.
Wow.
Because your currency has collapsed. So everybody's going to want to get out of the currency. Hey, N, you know, and you're going to go, well, I got cleaned out last week, you know. So
can you see that happening, unobtainium, in?
Well, there's a bit of that already. If you want to get, say, silver coins at the moment, I mean, the way it works is you pay for the product. If we have it, you walk away with it. If you pay for the product and we don't have it, there's delays that come, and you get given an estimation of that. At the moment, if you were to buy a bunch of silver coins, you've got to allow 4 to 6 weeks before we might be calling it. Now, it's been coming in a bit sooner. We've got things getting a bit better again, but the same rule applies. Like Jonathan's saying, people really want the silver coins. Have been hard to get for a good 6 months now.
Yeah,
that's interesting. And yet you were saying they're quite a good price at the moment. So I would have thought they would be quite an inflated price because of supply and demand. A lot of
then we've got to look. Then we have to look at the market manipulation, and for a guy, you can look at a guy called Bick Swear. I'll talk about that at the end.
Yeah.
So there's a lot of market manipulation going on. Now we can talk about the supply of silver in the ground. So historically, there's always been in the markets about a 16-to-1 ratio of, 16 ounces of silver per 1 ounce of gold in the ground. So you go, okay, well, that probably should be the price. You know what I mean? But it hasn't been showing in the markets because look at the gold silver ratio. But if you're to look at silver miners who are talking now about what they're pulling out of the ground, they're only pulling out of the ground about 7 or 8 ounces of silver per 1 ounce of gold. And silver is a commodity that gets pulled out of the system pretty quick. So it's used as a form of money. Well, they've tried to hide it as a form of money, but it comes in. People like Tesla use it in all their Tesla electronics and all the solar panels. So there's a big, big need for it in the electronics industry. So silver comes into the market and it actually gets removed from the market through all the consumer goods. So there's actually always a reducing supply of silver. So what's happened in the last few years, all these mom and pops and people like, you and me have all come in, they see what's happening to all these currencies and they're going to go, and they know that silver has a history of thousands of years as being money. Well, I'm going to go get some silver. And so all these mom and pops are now reducing the silver supply from the market. So it's actually drying up. And so Ian says, well, it's kind of, we've got this big timeline to wait because they've got to mine this stuff and they're mining it at only 7 ounces. In Australia or Mexico, only 7 ounces of silver per ounce of gold.
Wow,
and the gold just comes out of the ground and it just sits in a vault, but the silver actually gets used up.
Do you have a preference, Jonathan? Do you prefer, if I said to you, look, I can get you either, but you've got your choice, would it always be gold?
Depends on where this gold silver ratio is on the thing. Yeah. So if you're like a mom and a pop and an old person and you don't like that volatility, gold is always that safest one.
Thank you.
A mom and pop.
That's what I meant. Over time.
If you're like a young buck and you want to be more aggressive, silver, and then the real young ones are in the crypto. You know what I mean? Yeah. And that's you'll make millions and you'll lose millions.
Yes, you have to have big kahunas, as they say.
It's all about what's called your risk tolerance.
Yes.
So, so now let's just, really quickly, let's just look at the price of gold to housing. So I found this chart of the New Zealand housing markets. It's called the New Zealand House Price Index. I don't know anything about the housing market in New Zealand, so this You know,
that looks like a horribly jagged upward trending.
An upward trend, and it says 850,000 New Zealand dollars for an average cost of a house. That kind of sounds about right, you know, Auckland, Wellington, and then, you know. So what I did is I took the cost of the cost of a house divided by the price of gold. So how many ounces of gold, ounces of these, does it take to buy a house?
Yeah.
So, and here's a chart I made. So at one stage in 2007, before the economy, the global crash, the global financial, the GFC, it costed 415 ounces of gold on average for the average New Zealand house, and it crashed all the way down to 164 ounces of gold. 164 ounces of gold, what's that, about $450,000-$500,000, you know?
Wow. What year was that?
This here is 11. So it took about 4 years for the crash, you know?
Yeah.
And then the money printing happened, whatever, and everything's just popped up, and this has been the last decade. And then it crashed, the COVID thing happened, boom, 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 crashed really quick.
Yes.
So by 1st of June, you could have got a property for 220 ounces of gold, and then notice the housing market started to spike up pretty hardcore.
Yeah.
And then it went as high as 360 ounces of gold. And then now it's sort of coming back down again. I mean, this could go up, but the trend looks like, you know, it could be heading down towards this way again. Okay.
Yes.
Now, so what this tells me, I don't know anything about the housing market, but just looking at this chart tells me, well, it looked like we reached a peak of a housing bubble in 1st of November 2021. So I don't know much about what's going on. That was about, 7 months ago. And then now I've been hearing stories that people aren't buying anymore. Everybody's just sitting on the sidelines, which is causing the houses to deflate. So what's happening? The houses are coming down and the prices of gold.
Oh, if you go walking in the streets, I see houses that have been sitting on now for 3 months, 4 months. And the other thing is so many houses with for sale signs, because people are wanting to offload their mortgages, their heavy mortgages.
Exactly. So you looks like, based on this chart, that you could get, you could walk in at a property at 248 ounces of gold, but gold might be worth $500 then, just bear in mind. Okay. I mean, $5,000, because gold could be going up in price. So it's going down, and this is what you'll call an ascending triangle. This is called technical analysis. And when you have something called an ascending triangle, it's going up, 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 goes down.
Right. Don't you love that? I'm really liking this, this technical analysis, Ian. Don't you like that point where we have that term of art?
Yes, straight across. Yeah.
So
but are you interested? This must fascinate you, Ian, to see this chart, to see the the way gold and the housing market can go together.
Yeah. Well, one of the things that's happened over the years with the selling of the gold and the silver is that you use it as an extreme example, but who knows? One day, an ounce of gold buys your neighbour's house or bit of land.
Yep. And we're going to go into that a little bit further down. So, so basically, this chart is only 2007, and you need to look at gold and silver over a very long period of time to really see the trends. So we're going to look at the housing price with the United States. Okay. So let's just assume it's a similar kind of trend. The prices are going up. Okay. It's actually more expensive in New Zealand to buy a house. And then I took the price, and this trend is in 1964. So I'm going to do the price of gold by the average price of a house in 1964. So here we have in 1979, where gold was really expensive, it costed about 100 ounces of gold to buy a house.
Wow.
Okay, 100 ounces of gold. And this is where the calamity was happening, okay? And then they pulled the interest rates to 20% and whatever, everything changed. Then we have this high point here. So gold costed $678 an ounce, and this was at the height of the dot boom.
Okay.
And then the dot-com crash, boom, down here. So we're at now July 11, the bottom of the housing market, and now gold was $121 an ounce. You know what I mean? So 121 ounces of gold. and then it popped on up. This has been the last decade, and now it's come up here, and now we've got this triangle sort of. I should have made this triangle line here, so maybe like this. I'm not too sure, but I'm just playing around with lines right now. So it's looking like gold is weakening. I mean, it's looking like that this chart is weakening to the downside. Okay.
What do you mean by that?
So this, I can't, basically this is going like this, 1, 2, 3, 4, and then like that. Okay. There's a pattern going on. 1, 2, 3, 4.
But you said gold is weakening. I wasn't sure where
the housing price is weakening.
Oh, right. Okay.
Yeah.
Right.
They can't push the price up any further.
Okay.
So then a big change is about to happen. So it's all probability. It could go straight up. It could go straight down. But just bear in mind, we are at the end of a financial monetary system that's been going for 50 years. So anything could happen over these next couple of years. Anything could happen. Okay.
If we had ethical, stable, capable government, Jonathan, could we avoid this? If we had people who were transparent, open with the country, very frugal about how we're spending our overseas resources, making sure that we can provide food and look after one another, not spending billions irresponsibly. I heard about, for example, Ardern has paid potentially $250 million to John Tamihere, and I'm trying to clarify this, of the Waiparere Trust, just over the next 8 years. A government that's printing money can afford that kind of payment,
that creates
to get Māori jabbed.
Yeah.
That is not a responsible government.
Yep.
That is not one that's being fiscally responsible. So if that's true and you multiply that out, they're being so irresponsible. But if we had a really good practical government, could we avoid all this shaking?
You need what makes a practical government is sound money that you can't print willy-nilly. But governments in their nature don't like it because they like to control what they want to spend money on. But if you have a sound money system, it will actually reduce inflation to like almost zero, or to 2% or 1 or 2% a year, which is like how much gold they take from the ground. So it's a sound money system where they can't print willy-nilly. And it's because they're creating all these willy-nilly social programs or this or that or buying this. It creates all these distortions, and every distortion has its counter effects that might happen a couple of years later.
Yeah.
So, and we're about to find this out on a global scale. It's like all the chickens are coming home to roost right now.
Well, I just want to ask one more follow-up question. Is there any country in the world that's being responsible, that is linking it to where Ian began, which is linking it to gold and saying, no, we're going to be very careful?
It's looking like we're going to go in a minute to what's happening in Russia and China, this BRICS thing.
Okay.
Not that I know of. It seems to be Russia seems to be the most one that seems to be stabilizing to commodities. But I would say no. I'd say they've all got their hands in the print button. So let me leave this, and I'll go back to the chart. Okay. And I'm
very interesting charts.
Yeah, I spent a couple of nights plonking them all up. I really enjoyed it. It brought up I did technical drawing at school, so I brought all that stuff again.
Very good. Ian, what's your feeling looking at all of that? What's your feeling seeing that?
Yeah, it's making it all very straightforward. The progress for me, it goes back to gold and or silver being quite relative to what's going on, particularly gold because of its history, but it's relative to the market is probably the big standout there.
It's meaning it's responding all the time to different things that are happening in the market. A poor government, poorly run finances, gold goes up. It's pretty nice to follow that tracking. Yeah.
And there's a lot of people, very intelligent people. This would probably help somewhat too, is that what we've seen in the last few years is people who would never put their money previously into gold and or silver because they're financial people. They're kind of in, as close to bankers as you get. People have created financial institutions and made a lot of money from it, moving to buying decent amounts of, gold in particular. And for those people, just seeing them moving into this market, I think that's a very telling sign.
Yeah, and moving out of shares into good old stable gold. It feels very comforting gold, doesn't it? Okay, what have we got here, Jonathan?
Yeah, you can sleep better when you have it. When you've got something physical and solid that's has a true monetary value.
Yes.
Knowing that, and that the banks aren't going to take it or anything, it actually makes you kind of sleep better.
It's not fabricated, manipulated, and it certainly is much harder for the greedy governments to get hold of if you've got it yourself.
They can't get a hold of it. Yep.
Yeah.
Unless they confiscated it back in the the early 30s in America.
Yeah, so, but we're all learning that part of this era in human existence is to be able to say no to our governments.
Exactly.
The government overreach. All right. So what have we got here?
So Russia and China, India, the BRICS, Brazil, who's S? Which country is S? It's called the BRICS. Okay, so basically there's a bunch of there's a bunch of countries working together to form a new financial system to compete with the US global reserve dollar right now. Okay.
And who are they? Britain, Russia.
Who's Brazil, Russia, India,
Brazil,
China,
Russia, India,
who's
China.
Yes. It's leaving me right now.
Okay.
So these countries, by the way, and especially Russia and India and China, are hoarding gold like you wouldn't believe. They are buying, they're accumulating, they're just building their stockpiles of gold. Okay. So they've got something. They know that this house of cards fiat currency system is all coming to an end. Okay. So right now they're doing massive gold accumulation. There's speculation of how much they're accumulating. I think the governments are somewhat private with what they're accumulating. But just to let you know, at the sidelines, this country is working on a new financial cross-border payment system to compete with the SWIFT system. Because what's happened is America has weaponized their SWIFT system, which is the international payments, to say this country can do business, this country can't do business. Iran can't do business, Syria can't do business. Now Russia can't do business. You're bad boys. And so they've weaponized their dollar system. And so what's that's done, it's just created competition. Wow. And so they've got this new currency being built in the background called the BRICS currency, where what's going on into the future from here can go down to another topic called CBDCs, central bank digital currencies. And it's a pretty dystopian nightmare. We won't go into that here. But there's a lot of speculation of what these banks have got up their sleeves. Okay.
So wait a minute, but BRICS is doing something good then? They're on the good side?
I see you need competition. You need diversity. You need competition because the competition creates people obviously bettering themselves.
Yes.
And so
because people will migrate and look for the more ethical version.
Yeah. And when you don't have competition, you have communism, where they just top down, centralized control. You don't want that. You want diversity of these currencies, because if one currency goes to you've got an out, So
I like this. So BRICS is are they all working together then, or are they just individual countries?
China, Russia, and so with this in cahoots, America is also stepping up a narrative for war against these people. You're hearing two sides going on. Bad Russia, good America. Good Ukraine. Bad China. And so there's a global division happening now, which it's a primer for war. So,
and beware, as you said earlier, what we read in mainstream media, pretty much if you flick it on its head about 180 degrees, you can get some idea of the truth, because what we're getting in mainstream is very, very manufactured by a few people in the world. Yep.
We live in an inverted world.
Yeah, and if people doubt that, look at the ownership of even TV3. It roots right back to Vanguard and BlackRock, and they own media all around the world. So don't trust mainstream media. You have to do your own research online.
Yep. And if we look at the one on the right, India, Russia, China leading the ditching the US dollar as the global currency. So countries are starting to leave the dollar and they're trading with each other using their own currencies now. So they're not using the world reserve currency. Yeah. And if everybody stops using the US dollar for international trade, because that's what's being used, then what happens to the US dollar? No one wants it, and the dollars will go back to America. But remember, if nobody wants the US dollar, and it's worthless, remember that our currency is attached to the US dollar, and all the other world currencies is attached to the US dollar. So just bear that in mind. So
and that's except for the BRICS ones, Brazil, Russia, India, China.
And except their one. And I don't know how they're backing their money, if it's backed by commodities, if it's backed by gold or whatever. I'm just, on the sidelines, just everybody just watching this, on
Do
the
you know,
sidelines.
Ian? Because I understood that Russia has backed their currency again with gold. Is that right?
That's right. You couldn't get their oil without using the ruble or gold.
Yeah.
So that's where that strength came from.
Okay, interesting.
And which is causing that new crisis in Europe, where they won't pay for rubles. Germany won't pay for rubles because Russia, bad man. And so now Russia's going to turn off the gas supply, right? So they're heating up something there,
So Jonathan, I'm concerned New Zealand's now linked into America's fortunes. There's my question again. Can we disconnect? And you go, no, whoever does that will probably end up either being, horribly executed in a fake accident, or there'll be some kind of war. This is what America does.
We don't want war, but there's been talk of war for a long time of priming this war for a good decade. I've been hearing about this war between the East versus the West, the China, Russia, India versus the West. That's been the narrative like the last over a decade.
What's disgusting is war is so linked into greed, isn't it?
Bankers control the war. The bankers control it. They profit on both sides of war, so they fund both sides. Anyway, so
and we know, I know that from reading historical accounts of World War II, the Rothschilds were backing the Nazis as much as they were backing the Allies. So
and George Bush's grandfather financed the railway system in Germany to transport all the people to the camps.
I did not know that.
Yeah, and IBM created the system for all counting all the people in the camps. American technology.
So to do some historical research, everybody, because this is only touching lightly on the most profound truths that are being hidden. All right, what have we got here?
These are just sort of projected gold prices. If we're looking at the average gold price, the gold going long, it says the average gold price 10.1% per annum is, it's like 10, it's sort of 10% going up in price, 10% based on the, going through the volatility. It's volatile over the years, but if you hold on to it long term, that's your kind of average kind of gain on it.
You've seen one like that before, Ian?
Yeah, so I think a lot of people will talk just about any investment you make, whether it's a rental, and again, we're not giving investment advice, is that, 10% is a good return.
Yeah. And you've got to be able to weather a little bit of up and down, because that's part of what investment is. I
heard that aside from Bitcoin, gold's been the best performing asset of this past the century. I think I heard it. That was Mike Maloney saying it. So, so here is another indicator I took from another. I'm on a few financial newsletters, and this is one I took out yesterday. It's just a graph showing the general price of gold, and it's right now it's in the cheap range, relative to its historical pattern.
Just take us through that chart. I don't quite follow that. What are we seeing here?
So the middle one is the gold price, the blue one.
Mm-hmm.
And then if we go to the 1913 shadow, the 1913, okay.
Because we've got cheap, high confidence in Fed. What's that telling us?
The Federal Reserve prints off all the money. They're the ones, the Federal Reserve is one of the demons in one of the big demons in this whole pack of banks.
Yes.
They're the ones that print off all the trillions of dollars in America and flood the world with US dollars. And if gold is cheap, that means people are using a lot of dollars. So they've got high confidence in the Fed.
In the dollar. Okay. Yeah, got it. Okay, thank you.
And then
What's
basically
DEAR?
DEAR means it's expensive.
Right.
Trade it in for something else. Start unloading your gold. And you can see in 1980, it was start unloading your gold. You know what I mean? And then it went down. So go and buy some property with it.
Okay. All right. That makes a lot of sense.
Right now it's in the cheap mode. And then so it will make sense. Okay, hold on to it. And then if it starts to go into that DEAR range, start, buying suits.
Yes. Thank you. All right. Got that.
And here is just a bit more detailed graph of before from the same people, Incrementum, who I took this chart from. But down the bottom, you can see the average prices of gold over, in the different currencies over the years. US dollar, euro, the pound.
Wow.
So it's all about that, 8, 9, 10.
And after Australia, have we got Canada? That's Canada. And then
Canada, China, Japan, CHF. I don't know what CHF is. And Indian ruble.
Might be a franc.
Now we look at this is silver. So the average in US over since 2000, 10%, euro 9%, pound 10%. There's a bit more. Gold has outperformed silver by a little bit.
Yes,
from what I understand.
But basically, this is saying over time there's a stability to both of these.
Yeah, stability.
Yeah,
to weather the storm.
Yep.
So now let's look at something called the CPI, aka the CPI. Now we've all heard the words
consumer price index.
The consumer price index. Now this is the consumer price index of the USA. I'm just saying that we're probably somewhat similar in New Zealand. Now the red one is the what the government says. Okay. Now, right now in America, the consumer price index it's gone up 9%. The goods are going up 9% a year. Okay. Based on using, the cost of food, the cost of this, cost of that, the cost of petrol, eggs, the cost of cheese. Well, they don't put petrol into it. They don't put petrol into account.
Yes, I forgot that. Yeah.
Yeah.
But it should be everything that we as consumers.
They hide things. The government hide things to make things look better. And so back in 1980, they actually had they took away fuel as one of the factors, and then so that went down this red line. But if you were to add back in things like fuel and a few other needs that we use, it's actually this kind of blue line. And so right now in America, if you were to look at the stats based on the things that we measure back in 1980, including fuel, it'll actually be about 17%. And again, the government likes to make things look better than they are. So my opinion is that the inflation is probably at 20% or more. Okay?
Wow.
Yeah. So imagine that. So imagine you're paying tax, it was 33%, then your GST, and then your fuel tax, and then inflation on top of that, which is basically paying your income tax again.
Hence calling it the CP line, not the CP index.
Which asks you the question, what's the value, what's the benefit in me working if the government takes everything, which is what a parasite does. It just kills its host,
This is strong stuff. Yeah. And I'm so sick of governments who are meant to be our servants getting in and thinking it's okay to lie. We just want the truths. We want the truth. We have this inflation because they're printing copious amounts of paper money. And that's why, which is basically, it's a form of theft. Inflation is theft. Just put that into your head. Inflation is theft. And they just print. And they've just taken that money from your bank account. The numbers look the same, but all the prices of goods come up, and the government's cream that from the top. And they're now using that to finance, gender changes in 5-year-olds. Yes.
Who knows,
Yeah, who knows? Ridiculous things. But the point is that with inflation, you earn $1 and it suddenly is worth so much less. But you're working as hard.
If you were to suddenly have a whole currency that is just little silver coins or little 1 ounces of gold, and you start paying each other in that gold or silver, think about how much of that the government is getting. Nada. Zero. Zilch. I'm not saying anything. They could be listening, but just think about it. So,
interesting.
If you start paying people and, things like this, because of that,
Well, when a government vastly overreaches and abuses its powers, then it does behove the people to come up with creative solutions to stop what I call, at that point, it's an illegitimate government, because a government is put in under certain promises it makes. And when it vastly overreaches those promises and does things it never said it would do, and it never got permission from the voters to do, I think at that point they become deeply illegitimate. They're not our government anymore. So why would we pay a group of people who've lied to us. So,
Yep.
it's an interesting thing to think about, isn't it?
So we create a new system, and
Yep.
so the solution to this whole new system was a whole bunch of computer hackers came up with cryptocurrency, which is another conversation, as another counter to the banking system, because they were sick of all this kind of stuff.
We should have that conversation another time.
Yeah, because that goes into CBDCs, because that's cryptocurrency is kind of being co-opted at the same time. So
co-opted, taken over by governments wanting to control.
Well, they've taken the technology and they're using it and applying it. Governments will
against
apply
us.
They'll use the same the way the technology of crypto works, and then make their own crypto that's tied to their central banking, up to the beehive.
Yeah,
and they can.
So crypto, as it was initially envisaged, allows massive human freedom.
Exactly.
And they're trying to take it over to use it for massive control and to limit human freedom. We'll do that.
They don't really want us owning crypto, and what's happened in China is they've actually banned Bitcoin. They've outright banned it, so you can't go buy it. So they want to, again, communism. You get rid of the competition. But if you've got competition, it creates a really good economy, because everybody's working, everybody's trying to make things better. But if you've got communism, think Russia, think China, think your ration for your bread.
Think one source of truth. Anyone who uses that kind of language, that is not freedom.
On to resources. So this is for anybody that is completely new to what we've been talking about. It's like, oh my god, it's like the Matrix download. Okay, so if I was to say, and this is the stuff that really woke me up. If I was to say, if you need to go get educated after this, okay, you go online, you type in The Hidden Secrets of Money, Mike Maloney. It's 10 episodes long. And this guy, I've never seen anybody paint the picture so big on how this monetary system works and the value of gold and silver. It's called and he'll tell you about the whole scam of the banking system and how the governments work with the banks and how you get your money stolen. And he goes into Rome, he goes into Egypt, he goes into the whole history. And I recommend watching this series at least twice. You need to, first time you watch it, because it'd be so like, oh my God, I just got red pilled, and then the second time you need to start internalizing the information.
Yeah.
And if you can start to internalize the information, you're like Neo in the Matrix. You can see all the code going down the screen. Oh yeah, the banks are doing this. Oh yeah, the banks are doing that. Oh yeah, you can see it all,
Does he use that financial term of art?
No, I use that like a cake that's gone.
I love it.
So
it's a good one to do, because it makes me center my brain again, because there is a lot of intense information.
Yeah,
and having a bit of a laugh and having a bit of humor can help.
Mike Maloney has done a very, very good service to humanity by waking up a lot of moms and pops to what's going on.
Great.
Okay, so
is this where we start to move from all the horrors of it into how people can help themselves, how they can educate?
You need to learn and educate yourself before you can make rational decisions.
Yeah.
And this is the easiest way to 101 learn right here.
Great. Okay.
And then so over the years, I've listened to various different books and, listened to different people about different things. So if you really want to understand the nature of the banking system and the Federal Reserve, which is this giant octopus that prints the trillions of dollars, it is a book or an audio book called The Creature from Jekyll Island by G. Edward Griffin. It is the magnum opus of the central bank scam, the whole system. That is a very good audio book to listen to. Again, Mike Maloney, the Guide to Investing in Gold and Silver. I think you can download this free from his website if you just sign up to his email. And again, it's the history of the Rome, the rise and fall of empires, how they debase gold and silver and all this kind of stuff. It's just like watching his TV series.
Ian, are you familiar with him, and have you watched that or listened to that?
No, I haven't, but we'll point out something really important is what Jonathan's saying is, for people to get out and educate themselves on gold and silver, the banking systems, because I get this question a lot. I think the biggest thing that I see is people not knowing what to do, but yet they're all coming in with this amazing insight to look towards gold and silver as a safety net. And then what they're finding out by coming to us, whether it's our Auckland branch or the Wellington branch, is that it's it's easier to do than you think. So you're preparing yourself to have a little safety net. And again, all this study that you can do yourself and get yourself or your head in the right space is to make sure you make the right decisions and amount that you put into the different areas.
That's brilliant. And Jonathan, this is so good to round off today's talk with resources people can really look into. Let's keep going with these. And Kiyosaki has come a lot.
So everybody knows of Kiyosaki. He's a pretty known guy. He's this rich dad, poor dad guy. He's big into sound money, which is gold, silver, and crypto. And this one fake, he just talks about all the derivative markets and all the house of card Ponzi system that's happened over the last couple of decades and how it's already ripe to tumble. Okay.
We haven't defined Ponzi, but Ponzi to me is where you sort of rob Peter to pay Paul. You're just playing with money. There's nothing solid behind it. You're just and people can look into that, but you're sort of pretending you've got money that in fact you borrowed from somewhere else to make you look as if you have money, which is what governments are doing.
Yeah. So that's fake. And then there's this one guy called Jim Rickards. He's a guy that's really worked for the government. He's been on the inside. He's worked in financial warfare. He's like this big brain on steroids, and he really understands how gold is used in the global system to a very, very minute level. So he's written a lot of books over the years. You can go listen to you can go listen to his audio books. I recommend actually just jumping onto, I'm just going to go back a bit.
It's good to know that we've got those contacts there, Ian. We've got your contact.
So again, it's like, I'm just trying to move this window here. These are YouTubers I watch. I say it's very easy to wake up in the morning, have a cup of coffee, and go subscribe to a few people on YouTube who are really looking at the bigger picture, what's going on. And here's a bunch of people that are very kind of known in the YouTube circle, and they're very known people that look at what's called the macro picture, the big picture, the geopolitical mixed with gold, silver, crypto. They're quite good at, every person's good at a certain thing.
Yes.
George Gammon is very, very popular right now. He looks at the American markets in a great deal. Mike Maloney, he's like a granddaddy of waking up people to the money system. Robert Kiyosaki. I follow a guy called the Market Sniper. He's a macro guy. He looks at many different markets, gold, silver, crypto, and he looks at a bunch of markets.
What's this road to Ruta, Bix Weir? What does that even mean?
So that Bix Weir, he's a guy that purely looks at the silver market, and his whole thing is he analyzes the manipulation of the gold and silver market. So he's he's very specific, and he follows all the people that are manipulating, and he talks about the COMEX and the LBMA and all the manipulation going on.
Okay? We won't go into defining those, but what does Ruta mean?
That goes back to if you listen to him, it goes back to it's something to do with Alan Greenspan. How he was a computer coder, and Alan Greenspan created the financial system for all the computer algorithms doing all their business in Wall Street.
Alan Greenspan was a disaster, wasn't he? That really led to the GFC.
And apparently, at the top of the code is something called root A. That's the first line in the code of like open, close. So road to root A, something like that. So if I go back to the left, I've got Gregory Mannarino, and he's all about, if you want to hear what's happening in the markets that day, that morning, in the last couple of hours, and he's very anti-bank, he's got a good perspective. He's all Wall Street. He's a former Wall Street trader, and he'll tell you what's going on, like, this crashed, or the dollar spiked, or that happened, and Silver Bullion TV talks about gold and silver. The Morgan Report, that's a guy, David Morgan, that knows everything about the silver market and gold market. So he's like an old timer. Mike Maloney's an old timer. Jim Rickards, he's all about gold, and he's all about what the state is doing, what the government is up to. Because he's been in the government, he's been in financial warfare, so he's been in the CIA. He's all about what's going on in their mindset and sort of the gold market. Wall Street Silver, silver focus, but they look at the market in general. Road to Ruta. Palisades Gold Radio, it's just a guy that puts on different people that talk about gold, silver, and crypto. And Stansberry Research, she's a lady who is based in Canada or the USA, and she's very good because she's very easy to understand. And she'll bring in all sorts of people on her show, gold, silver, crypto, or she'll bring in all the big names. And she'll just talk about random different things happening in the market, but that's very easy to understand for a common person.
Jonathan, this is excellent. And then we finish with the address for our wonderful Ian.
There we go.
For people. And can I say right now, we are as friends. We've said this a number of times. This is not advice. We're just three friends talking. And Ian hasn't asked us to push, or he hasn't asked for anything from this. In fact, we just asked Ian to share his understanding, his knowledge, the most frequently asked questions. And so I just wanted to give mum and dad investors who, having listened to this, think, well, let's put a bit of money into this, somewhere you can go, and somebody I know is trustworthy. So there it is in Wellington and in Auckland. Ian, what are your final comments from today? It's been a long session, but for me, a really intriguing one. What are your final comments to finish up today?
Yeah, I think what's been covered is a lot of what a lot of people would want to know. There's the number one thing for a lot of them to have a look into their options. And I've certainly supplied a lot of people you guys know as well with gold and silver.
Good.
And it's a lot easier than people think to be able to do it. And it's just a matter of working out how much is right for you to put into that area, whether you're coming to us at the Wellington branch or the good guys up in Auckland, who I know Jonathan's dealt with quite a bit. He'll vouch for them. It's pretty easy. It's pretty straightforward stuff. And it's not a bad little safety net.
And what about people in the South Island or in little towns who want to do it but can't get to the two centres there, Auckland or Wellington?
Yep, we've got a lot of people from the South Island that we deal with. Some of them pop up and see us. We arrange getting stuff to them as well. We prefer the people to get it themselves, but there's always a way to do something, and there's never a problem.
So they can talk to you online if it's a farmer in some remote area who wants to have a safety net.
And really easy is the email address, because you send us an email and just you might have some extra questions, so it's really easy for us to lay out and answer those questions. We send you back a table of the prices, what they currently are at the moment, to get them from us. And what's available right now, in other words, if you pay, it's here ready for you to pick up straight away, or whether it's going to be a week or two. We've never gone wrong. It's just, and we're talking about millions and millions of dollars.
Yeah, that's really good. And I'd like to know who I know who's got gold from you, please. I'm joking. Your lips are sealed.
Yeah, absolutely.
Good man. It's been really lovely, and having some humor in there is fun. But Jonathan, my final word is, well, first of all, Ian, to thank you so much for coming on and sharing with us your knowledge. And you're very grounded, you're very calm, you're very clear. And I know that you're a trustworthy man, which in New Zealand right now is as rare a commodity as precious gold and silver, I think, or more rare. So thank you for that. Jonathan, to you, I can't applaud you enough for what you've prepared for this talk. You have made it really accessible and really interesting and understandable. You've been so patient with no matter what questions for me. It's, I'm sure, going to help people feel more powerful in a world where our governments at the moment are trying to disempower the people. Mm-hmm. What did motivate you, Jonathan? I'm just really interested in the end. So you could have kept all this information to yourself and said, I've done it all for me and I'm going to be all right, Jack. I don't need to share it with anybody else. But you didn't. You approached me and said, look, I think I might have some stuff that might help a few people feel more confident. What inspired you?
Well, we're all in this together. So when shit does hit the fan, I don't want people around me coming to me saying, help me, Jonathan, help me, Jonathan, help me, Jonathan. I want people to help themselves. I want everybody because we're about to have what's called the greatest wealth transfer on the planet. That's what's coming. And I want everybody around me to be in the best possible position if and when this does happen. And, if we're all living better off in life, we can all help each other,
You're
So
saying the greatest wealth transfer in the
greatest-
history of mankind.
it's
That
about to
is
happen,
part of
apparently.
the intention
Great
of
Reset.
the World Economic Forum.
The
They
Great
talk
Reset,
about it. It's online. You can look
Mhm.
up the WEF, a very sinister
Mhm.
group, and they talk about it under their Agenda 2030. They talk about it openly. The documents are there, and they're saying you will own nothing and be happy. Now that's for the people. For them, they want to own everything and keep gobbling up everything.
Yeah.
And I think they'll be miserable because I don't think they'll succeed, Jonathan.
Nope, they're not gonna succeed.
And I'd like to talk about that in another long form interview with you, but it's been an absolute pleasure, an honor
Yeah, it's
to
been a
talk
lot
to
of
you.
fun.
Really good work. I can't thank you, either of you, enough. What a delight. Thank you, Jonathan. Thank you, Ian.
Okay, cheers.
Yeah.
Okay. Thank you both.
Ciao.